financial management. Before we start, I would like to tell that those who have scored 45 and above and writing all the 3 examination, there is all chance that you will be clearing the examination this time itself. Okay, so if you have scored 45 and above, and if you are writing BFM and elective also, because now that 150 aggregate method will apply, irrespective of the chance, your chance, whether it is first, second, third, fourth, or fifth, whatever be your chance number, doesn't matter. If you are attending all the 3 papers now, then that aggregate will work. Second thing, then next week it is bank financial management. As we are discussing with Ramesh sir, see conceptual clarity. Conceptual clarity is very much required for scoring good mark in this examinations. So my advice to all of you is that next 5 more days are there for the examination. Please concentrate on your studies and prepare your own points every day. I'm sure that most of you must have taken leave also. So make maximum use of your time, because very important. Don't engage in any other activity other than studies during this week, because now BFM is such a paper that if you are understanding the concept very well and you have prepared, then definitely the chances of you scoring is on the high side only. So with this, our aim is to support all those who have already started preparation, already cleared, or who want to clear this BFM. We thought now we will have a 2-day very fast and exam oriented. As you know that bank financial management is a big book, and it may cover, it may require, if you are taking as a tuition, like it may take 6 months time, full day classes required. But we are consolidated everything, and we are trying to deliver within the short period of 2 days. And there the faculties also are prepared very much exam oriented, and it will be delivered to all of you. And I am sure that this will definitely benefit for your examination, and you can easily score more than 50 marks. So with these words, so one more, is there any chance to continue the same system in upcoming examination? In upcoming examination also, this aggregate method will continue. That is 5 purpose will be there. If you are scoring 250 marks aggregate, and if you are writing all the 5 purpose, then 45 and above if you are scoring, then also you will be declared as passed. So the aggregate method will continue. Only new system is that negative marking will be there. So we did not go to all these things now, because now all of you are going to pass the examination this time itself. On December 10, all of you will be becoming a certificate associate for sure. So best wishes to all of you, and I welcoming Ramesh sir to this forum on behalf of all of you and on behalf of IBS myself. He's a very senior faculty for IBS, taking different subjects, and he's having hands-on experience, very long experience in Forex area. So he'll be taking Forex and Treasury, that is module A and C. As I used to say, always know, we have to, when we are preparing BFM, module A and module C should be clubbed, and module B and D will be clubbed, should be clubbed, because now that will be taken by another faculty. So I am not taking much of the time. Without further delay, let us go to the classes. Warm welcome, Ramesh sir, and now it is over to you.
Thank you. Thank you, Velitan sir, and thank you, Biju, for the back office support.
Thank you, sir. Thank you, sir.
Okay. So once again, dear friends, welcome you to this. It's only a recap. Already the examination is in the offing that you would have all made the preparation. This is only the brush up the things, and maybe some areas which, because of the passage of time and because of bogging down of your work, and because of not refreshing frequently as it is required, some just that we will be rekindling that, so that you will be brush up in your memory afresh, which will help you to write the examination. And this concept of just a recap or a quick snacks is working very well, because the last examination they tried this, and it was most of the students were very happy and they found it very useful. So this will be just going very fresh. This is only just recap. And at the end of the class, whatever is your precise doubt, conceptual clarity, please ask. So with these few words, we will start. Let me share the screen. So, okay. Hope you can see the screen. Voice is clear. Oh, that is answered. Right. So, okay. Precisely what is foreign exchange? Since the word exchange is there, we will be conversion one currency to another, conversion of one currency to another. And usually the currency of our home country, we call it that is home currency, and the other currency, we call it as foreign currency. And the foreign exchange transaction is when you are putting through that transaction, completing that. Suppose you are buying to me for exchange of $1,000. It's a contract, because you are coming to the bank and we agree that we will be, today the rate is 83 means. So you are bringing $1,000. I will be giving you 1,000 into 83, 83,000 rupees I will be giving. This putting completion of transaction is known as foreign transaction. As you know, either it will be a buy or sell, because we will be dealing with the customers only two types. Either we buy foreign currency or we sell foreign currency. This is very important. Identification is very important. And what is exchange rate? Because as I told you in the example, $1,000 you are bringing at the rate 83, I am giving you 83,000. So the exchange rate is very important, because only with the exchange rate we will be able to find out what is the exact home currency I will be able to give you or take from you, depending upon purchase or sale. So exchange rate is very important, and it is a cost of the foreign currency. So it is a cost for the foreign currency, that is the exchange rate. And the exchange rate is very important, because only on application of the exchange rate, I get some foreign currency. Once I get the foreign currency, I cannot keep in hand, because I have given you 83 rupees now. So if I keep it in my hand, if the rupee that it comes down, rupees, that is, if it appreciates, suppose say the rupee comes to 82, then I have given you 83, now it is 82, I stand to lose. So whenever we apply the exchange rate, by applying the exchange rate, we have gone for conversion. Whenever we convert, then the position exchange risk, so many risk adds up. So the exchange rate, whenever we apply the exchange rate and conversion has happened, the moment the conversion has happened, the exchange risk starts running. This could be a, now that you have completed all the topics, I am telling comprehensively. I am not just sticking myself to a particular topic. What are the connected questions in any module? That also I am discussing. As Palitan sir has told, this is an examination class. So whenever an exchange, applying exchange rate, the conversion has happened. The moment it has happened, what risk starts running? They can ask exchange rate, exchange risk or price risk. Everything comes under market risk. What is the need for exchange? You see, for global trade, for enabling trade transaction, that is import and export, or enabling capital flows, travel, tourism, nothing is possible without the forex transaction, because we are dealing in global where the currencies are different. Okay. Then what is a foreign exchange transaction? As I have seen, I have told you, any currency that is denominated in foreign currency, and the process of conversion of foreign currency into domestic currency is what we called as foreign exchange. Next, coming to this, The market, as you know, the market participants only create the market. And market is a place where buying and selling happens. So there should be participants. Without the participants, a market cannot function and market will not happen. Trade will not happen. Foreign exchange is also a commodity. It is just like any other commodity. Forex also is a commodity. So these are all the central bank of a country. These are all market participants. Commercial banks, they do merchant trade transaction. Because merchant transaction, what is a merchant transaction? They can ask, this is a transaction that is put at the branch level for the customer. It will be either purchase or sale, buying or sale transaction. Trade transaction very important because this is done at the forex level. Forex, that is the dealing room level, where it is speculative transaction we call it, because this is for the purpose of making profit. Suppose a question, the reason for which the trade transactions are done is for making profit, profit oriented, not profit alone. It is for intention of making profit. Naturally, losses are inevitable as we have complete risk management. The risk also, that loss also is an inevitable. It is a part. So the trade transactions are done with the intention of doing profit. This is very, very important for a bank because 25% of the bank's profit are earned through these trade transactions or speculative transaction. And the merchant transaction, the possible question they can ask is, in merchant transaction, there cannot be any loss because obviously we add sufficient cushion or margin to it. Margin, because you know that buying transaction we deduct the margin, selling transaction we add the margin. So naturally, the merchant transaction can never result in loss. Then investment banks, these are all for the purpose of making investment, enabling the clients or corporates make investments for the purpose of profit, for the purpose of making profit. Then corporates, this also same, only individuals for trade, travel, everything, they, because for them we have to do the forex deal. This creates a market. This creates the market, and we are all the participants. Forex brokers, very, very important. FEDI question what they can ask is, what is the status is self-regulatory authority. Often the mistakes done by the students, I do not mean any specific person. There are, because from the past 8 years we have been taking the classes, and wherever the mistakes have been done, that we have collected the data so that nobody should repeat the mistake. Only for that I am telling. FEDI, often the tendency will be to write as regulator. FEDI is not a regulator. The answer is self-regulatory authority. That is the answer, FEDI. Foreign Exchange Dealers Association of India. Members are all the banks in India handling foreign exchange. That includes foreign bank. There also students have seen mistake. Well, sir, whether foreign bank is a member of FEDI or not. Yes, it is a FEDI. All the banks in India who are dealing in foreign exchange, including foreign banks, are members of FEDI. Then foreign exchange brokers, the possible questions are, who gives the accreditation or just like the license authority, that is also given by FEDI. Because foreign exchange brokers, their role in the forex market is tremendous. Even in the banks who have worked in the dealing room and all, they know the importance. Because foreign exchange, without them, sometimes you'll be stuck with the position. Then foreign exchange brokers, they will be the person who will be able, because they have direct in the market, they know who is in need, who will be the buyer or who will be the seller. So they act as a middleman, but unlike other brokers, they have got strong, rigid control from FEDI. They have got so many regulations are there. They have to adhere always to the guidelines issued by FEDI. In case they are not abiding by the rules of FEDI, example, what is the rule they are not abiding? They say always the broker should be in line with the market. They should not go off the market trades. The rupee is now trading at 83.07. They should do only around that. Otherwise, they should not go off the market. It has to be, if they are doing a off the market deal, the authorized persons. And here also, whenever I say authorized dealers, I mean that authorized person, because as per FEMA, we are all authorized persons, not dealers. But authorized person, we have to report to the Reserve Bank of India. They will be delisted. Their accreditation will be cancelled. So it's a very, because the reason for such stringent control over forex brokers by FEDA is because they are handling huge amount, crores and crores and crores of amount they are handling. That is the reason. Then, and the instructions to the banks regarding the brokers are only the 5%. You should not put through more than 5% of the transaction through the brokers, and net result, whatever is the total turnover that you of a bank that you are doing, that should be equitably distributed among all the brokers. These are all the possible questions from the broker side. Then forex market, if you read the characteristics, as you know, that market is a place where buying and selling happens, and the different market has got different characteristics. So the main important characteristics of the forex is that it is 24-hour market. It is 24 into 5 market, means Saturday and Sunday is a holiday, and it is affected by the time zone differences. It is time zone differences. One place will be working, other place will be in America. Now it is not working. Now here it is will be working shortly. So the OT, so the time zone differences, the possible question they can ask is, they will ask, you should have a rough idea about the world markets. Often the questions will be asked. So because of that, I am repeating that early morning, the eastern side, the Tokyo market, that is Japanese market, opens by our 3:30 a.m. Now Japanese market is working, and by our 8:30, that market will be closed. And our 10 o'clock, Indian market opens. Then afternoon by 12 o'clock, the Frankfurt market opens. And night 7 o'clock, US market opens. So these are the, though other markets are also there, and bear in mind, these are the most important are only 4 markets. That is early morning, Japanese market, Tokyo market, 10 o'clock, Indian market, noon, 12 o'clock, Frankfurt market, and evening, 7 o'clock, 7 p.m., New York US market opens. So the questions they ask is, by 5 o'clock, by evening, say 4:30, which are the markets that where you can make the trades? The answer will be Indian market will be available, and also European market will be available. Another question comes, suppose 9 o'clock you want to do a deal, only the US market will be open, because when the US market opens, already a European market has closed. So this is just to have an idea. This is enough, not a problem. Just you should have an idea, so that what are, if suppose I want to put through a deal, and what
Sir,
are the things? Yes.
what is the normal working hours, sir? 10 to 5?
That depends upon their country regulator, their regulator.
3:30, no, sir, in India.
What I think, because this is a crash thing, you just make a note of all the things. At the end of the class, we will finish up. Okay.
Okay, sir.
Otherwise, I will just because.
Sir, previous slide regarding brokers, some percentage you told, no, sir. Can you repeat that?
No, that you asked after 5%. That is why
Okay.
you should not exceed and should be equitably distributed. Because
Okay,
of the entire subject, I have to finish that, and possible questions answers only I have to discuss. Most of the things I am extemporary, I am discussing. Just a note of it. I guarantee you, I assure you that I will finish up all your doubts at the end of it, or even after that. I will give you all my contacts, I will my mobile number, everything I will give you, and whole team IBS will be supporting. Don't worry, because otherwise you not be just because that 25% of the time we have to finish the entire thing. That is why I'm asking.
Okay, sir. Okay.
There's a note of it. I will give my number. At the end of that class, we will finish up that. No problem. Okay. Otherwise, just lose the trend. Believe, because of that only I'm asking. Never feel offended. Okay. And okay, that time zone differences, these are the possible questions they can ask. So have a rough idea, that is. And OTC market, I told you, market is a place buying and selling happens. And 3 types of markets are there. One is OTC market, that is dealing room market. Next is stock exchange, where this happens. Then third is broker market. These are all broker market. Then OTC market, the specialty is electronic trading, and it is straight through process. What is the straight through process? Straight through process is a process where there is no manual intervention. And the global market with more, that is the characteristics of forex, because it is across the global we are settling things, where it is the point is it is affected by the time zone differences, and the trade volume is nearly 6.6 trillion. 1 trillion is 1 followed by 12 zeros. So nearly the trade volume that happens in the global market. But the main is here that here most of nearly 4.4 trillion that happens in the forward market. These are all speculative market. The figure is being, it will change. This that just to make impress upon you the magnitude of the transaction. I have put that's all. The figure will be often varying, but anyway, it is more than $6 trillion. And high liquidity market. Possible questions they can ask related to this is because of the ABM paper also people were students and so many students called. They have messaged me because the conceptual clarity is what? Based on the conceptual clarity. If a person has got good clarity of the subject, then concept, then only they will be able to answer. Like that, they are framing the questions. So we will also adapt work accordingly. So highly liquidity market. Okay, there is no point whether they earlier they will they used to ask straight away whether the what is the nature of the forex market? Highly liquid. The answer option B, illiquid, like the tight market. So it's easily you can take highly liquid market. That was the earlier thing. Now the conceptual clarity is important. So how they are asking present day, they are framing question like this. What is the impact in the forex market because of the nature of high liquidity? So if the market is highly liquid, what it will make in the market? So the market will become highly dynamic. Highly dynamic. So now they are framing the questions like that. So you should not stop studying the forex market is highly liquid. Stop. You should not stop it there. You should think concept, but because of this, how that affects the market? What are the repercussions because of this high liquidity? The market becomes highly dynamic. Because of the highly dynamism, the fluctuation in the rate happens. Because of the fluctuations in the RFN, exchange risk, so many things are connected. So average, the same says every 4 seconds the rate changes. So these are all things in the concept. With the liquidity same, that is the reason for the dynamics in the market. Maximum, the market not static, the highly dynamic. Every 4 seconds the rate changes. That's the reason for the fluctuation. These are all connected things. You should have have an overall idea. Then you know the concept. Oh, this is how that happens. So whatever be the question they are asking, you will be able to write. Now you have to prepare like that. Already you have prepared. Now my humble request is just reframe what are the points that you have studied like this. So highly liquid, or because of the liquidity, so many transactions happen. Every 4 seconds the rate changes. So it is a very, very dynamic, highly dynamic. So this is the reason for the fluctuation in the exchange rate. Frequent fluctuation. Like that you study, that point is complete. Okay, no problem. Let them ask any type of question. Let them frame the question any way they like. No problem. Because you are very clear. You have got a clarity over the concept. This is how that you have to study. Huge capital and trade flows. Okay, you know that capital is the factor that makes the capital flows. Once here the capital, because now it's very, very relevant now, because as you know in the US market, they have increased the US dollar interest rate. In America, they have increased the rate of interest. So because of that, entire dollar that was lying in whole world, now that is flowing back to US. That is what that is happening past 2-3 months, which has resulted in the demand supply. So the supply of dollar has come down, demand has increased. Now the rupee is now depreciating. Now we have seen that it is between 83 because of the RBI's intervention and all. It has been brought down to 82 pounds something. This has a huge capital inflows perfectly. Now this is happening because of the interest rate. But India, we should be very happy that since we had the sizable forex inflows to the extent of more than $643 billion, we were able to withstand that. Now around $540 billion, we are around that. We are having, even after a outflow of net of $100 billion, we are able to withstand that shock. So we should be very, because other countries, if you look at that, like Sri Lanka and other places, they are not able to withstand the shocks because of it. Added to that, the Ukraine war has come, the cost of crude oil has increased, so many comprehensive. So whenever you are studying, why I am describing is, whenever you are studying something, that what are the things plus or minus, what are the, who are all the parties affected, or in what way it is, either it is benefited, like that you have to comprehensively, just academic interest, that is enough. Huge capital means right now it is happening because of the interest rate, entire dollar FII more than 40,000 crores, nearly 50,000 crores have been withdrawn from Indian market. So many things are there. So that these are all the, so many reasons are there, and these are all also the additional factors or major factors that is contributed for the depreciation of the rupee recently that we are all witnessing. Trade flows, naturally the trade also will enable inflows or outflows can happen. High fluctuation, this is linked to liquidity market, already have explained. Settlement affected by time zone factor, I have already explained that 4 centers, bear in mind, Tokyo market, India market, Frankfurt market and US market. And market affected by government policies and controls. Here one shot, they can go on asking you any one para questions that will describe so many things. The answer, the question will be, what is the net impact on the importers or exporters or the exchange rate? Bear in mind, any good development happens, any positive things happen, a development, GDP grows, that will be reflected in the currency by its appreciation. This is the only point that you have to bear in mind. Anything, any GDP grows, inflation control, any positive things, like just to be bear in mind, anything positive happens, good for a country happens, mean that will be reflected in that country's, the currency will appreciate. Let them frame the question as case study or something. You have this in your mind, you will be able to do that. This is the tip. This is the tip. The country, the currency will that is appreciate. So that is the result of this effect of this, not the result or effect of the positive developments in the economy. Any good thing happens in the economy, that will be reflected in that currency by its appreciation. All right. Then these are also very simple, fundamental reason. So many factors are there for the exchange rate to be get influenced. Main is the balance of, now you know what is depreciation, appreciation. I have explained you the reason, what is the reason for the depreciation of a rupee. And now that always bear in mind, whether it is depreciation or appreciation, it is a relative comparison. So if I say the rupee has depreciated, it is wrong. I have to complete that. Rupee has depreciated or appreciated against dollar. Because the relative comparison, only you have to complete it with which currency I have depreciated. So naturally here a catch will be there in the examination. There, just patiently read the question. If they say it is appreciated, just to see if rupee is appreciated, naturally dollar has depreciated. If dollar has depreciated, rupee has appreciated. Just the opposite. So in the question, just bear in, read patiently. If they are asking whether if rupee is depreciating, immediately, oh, rupee has depreciated. That means dollar has appreciated. Like that, you should frame it in your mind. That economic growth rate, I told you, positive growth rate will reflect that in the strengthening of that currency. Fiscal policies, monetary policies, everything, these are all political, everything, anything favorable, go for the currency will appreciate. Same technical factors or speculative, whatever it is, good things will be reflected, the strengthening of it. That overall idea is enough. That is enough, more than enough. And you know the basis of rate, cash, term, spot, forward. They can cash, you know, the settlement on the same day. Term means next working day. Spot is second working day. The second working day, because I will be only giving emphasize where the students go wrong based on the questions they ask. So the spot is still then I was amazed to see the some students are asking some small doubts. But as far as I am concerned, there is no small or a big doubt. Any doubt that bothers us, which is preventing you from to understand the clarity, is a big one. There's no classification small or big. So you have to clarity should be perfect. That's why spot means second working day following the day of transaction. That is a mistake. Everybody they mug up or study things. Oh, spot is the second working day. Second, okay, the second it is not complete. Second working day means following the date of transaction. So Monday we have done the deal. So second day following the day of transaction means you exclude Monday, Tuesday is the first day, Wednesday is the second. That is why there's a mistake. What I found with the students is they are not they are studying it 95% only complete second working day. But second working day following the date of transaction, that will be complete 100%. Then you will not have any doubt. Then forward is at any date, any transaction that falls beyond the spot. Indian market, we restrict only normally 13 months. Because you know that whenever we are giving a rate to the customer, putting through a forex transaction, applying an exchange rate, we are taking a position because you are acquiring from foreign currency or you have sold some foreign currency. You have to immediately offset in the market. Otherwise, the fluctuation can lead you or put you in losses. That is what we call it an exchange loss, price risk, market risk. So that is why that the market, you should, whenever you are having currency, you immediately settle it in the market. So for the forward, somebody should be there to buy from you or sell for you. That in India is available normally for 13 months. So if a customer is asking for a, say, forward more than 13 months, you have to contact your treasury. They will arrange it. Normally, the market is only for 13 months. Suppose your customer is having for 2 years, means you have to contact the treasury. That is how they do is that they will not ask for the examination just for academic intent. They go for cross currency swaps and they will manage the position. Normally, the market is for that.
Next working day means after 12th, 13th is a holiday.
Next working day is next working day. There should not be any doubt in simple things. We will discuss after the class. Next working day, the next working day means next working day. What is that? If it is Friday.
The 15th was written, no, sir. If it is 12th, the 15th was written.
13, 14 will be Saturday, Sunday.
Okay.
That's we will have that small clarification because so many big things are there. We should not spend our time on these things. Make a note of it. Definitely, I will clarify it. Don't worry, because we will just go in a flow. Because everything I am just extemper I am discussing. Otherwise, we will not be able to complete with respect to examination. That is why I am not discouraging you. I am not just what is this spoiling your inquisitiveness. We will after the class we will look, no problem. And this is buy and sell always is from the bank's point of view. This is where the most of the students. 2 days back also one student referred to me that he was very clear with the exam. Everything was perfect. Treatment of commission was perfectly done. Treatment of premium was perfectly done. Only where he has gone wrong is he has wrongly taken the rate. Instead of purchase, he has taken the sale. Conceptual clarity. There is no use. He's studying all this in operation success, patient diet. So the basic thing is purchase and sale. But all other things people are now very thorough. I find that no mistake they do. It's very good, but for the basic you should understand purchase and sale. Purchase is, that is why again I have emphasizing purchase means inflow foreign currency for the bank. If the bank is acquiring foreign exchange, it can be inward remittance, it can be a credit to nostro. Inflow for the bank, just like that. There should not be any doubt. You should not even have a small speck because we are all dealing crores and crores of rupees in the bank. We should know what is an inflow for the bank. We are all the bank. Just look at from that angle. So I am the bank. So any inflow for me To quote that earlier example, I was telling somebody was bringing $1,000. So he's bringing $1,000. It's an inflow for the bank. It's a purchase. Naturally opposite, outflow for the bank is a sale. So study this, that inflow for the bank. So whenever a question comes, first of all, never immediately jump to the treatment of premium or something. First of all, be patient, maintain your coolness. From the question, first of all, assess, find out what either it is a purchase or a sale. Moment you identify that purchase, whether it is a purchase or a sale, half the bridge is crossed. Half the bridge is crossed. Then other things are excessively. Whatever, you should not get tense. Actually, being human beings, psychologically, the tension will be there, that we can understand. And the IABF also frame the questions based on that. People will be, students will be having some tension. So the question should be like that. They know it. But we have to come over the, we should not maintain that tension or that what is stress factor throughout that examination. Initially, you should have that period. Immediately, you should come over that. Think cool. Then all the answers, definitely, because the answers also they are giving. So coolly, you will be able to find out that answer. And the tips, especially Valiathan sir has already taken, definitely will be helping you a lot. So again, that buying and selling, the identification is very important. And buying and selling rate, already I have told you, inflow, and that is inflow for the bank, apply that. Another mistake is bid and ask. So many persons are asking, bid is buying. So I got confused with the bid and ask. Never get confused. I also, again, also a small tip, buying rate and bid, BB, go for BB, buying, bid also BB is there. Another should be asked is for selling. Like that, you study that. Because everything, of course, whenever you are studying new things, it will appear to be very, very new and unfamiliar to you. So you should have some strategy so that you can remember that. Because BB by bid rate is BB, sir. That's often I confuse with bid and ask. Why should go for confusing BB bid rate? Buying and bid rate are the same. At least that is, we should be happy that it starts with the letter B. Okay, like that you go. You have framed some tips so that you can easily remember. That is enough. And direct quote and indirect quote also already you know very well. And a possible question they can ask is, in India, we are following direct quote. And another question they can is, which code the home currency is fluctuating? That is a direct quote. And another question possible question they can ask is, what are the currencies where the indirect quote is still followed? That is last one, GBP, Euro, Australian dollars, New Zealand dollars. Here the treatment will be the same. These are only the 4 currencies now prevalent in the whole world which follows the indirect quote. All other places now only direct quote is followed. Now, the exchange rate quotation also, the problem, we are not entering into the problem. Already you would have done all the problems. So that only the conceptual clarity and theoretical points only will be discussed now. Here, the another question is, that whenever a bank is giving a quotation, when you are asking a quotation, you are the customer, you are asking a quotation to a bank. The bank which is, you are asking the bank, you are banking with State Bank of India. So State Bank of India will give a quote. What a quote? Because it is a dual quote. Now in the, it's a property of Forex market to give a dual quote. Dual quote means both two-way quotes. Whenever you are asking a rate, both buy and sell will be given. Both bid and ask rate will be given. You cannot find it anywhere in the world. You ask for a buying rate, they will give a buying rate. But this is the only market where the dual quote is given. You ask for a rate, they will give both buying and selling. This is for the transparency, because you do not want to conceal or reveal the intention of it. That is it. So this, when you are asking a rate quote with the State Bank of India, and they are making the quote for you. That is why they are known as the maker. The bank which is making the quote, giving you the quote, preparing the quote, is known as the maker, and you are only taking that, availing that. So you are the taker. So the maker and taker is who makes the code? That is State Bank of India is a maker and you are the taker. So whenever you say the terminology is mine means I buy. When I buy, bank sells. Or I can put it slightly tough. Whenever mine I buy means the taker buys and the maker sells. Only you just study one thing, other will be the opposite. You need not go for studying both the things. One thing you study. Mine means I buy. Oh, that the yours is just the opposite. Like that you study. Now that all the codes here also, wherever the students are making the mistakes only, I am highlighting. The codes are nearest to the 4 decimal place. The first two big figure, second, first and decimal figure 1 and 2 is paisa, 52 paisa. The third and fourth decimal are quarter of a paisa, which we call pace. Here the mistake is, this is a decision taken by the FEDI. So this applies, the rounding off to the nearest quarter of a paisa, this applies only to India, that is rupee codes. Wherever the $1 is equal to how much rupee, 1 GBP is equal to how much rupee, there only we will go for the rounding off, not in any cross currency transactions. I repeat, very, very important. This rounding off is a decision of FEDI and this applies only to the home currency. Never go for rounding off in any other currency. We should not step into their shoes. That their regulator will do. We are only bothered about that Indian INR home currency. That only the instruction can be given by FEDI. So this currency, this rounding off to the third and fourth decimal place apply only to the home currency. That also you should be very. Then another is what is a forward. As I have explained to you, forward is any transaction that falls beyond the spot is a forward. It represents future value of the currency. And there definitely 1 or 2 questions can be in the forward. Here, what is the premium? That the concept should be very clear. Premium concept should be very clear, because if in the forward that currency is costlier, that means it is going at a premium. Otherwise, same question they can reverse. If that currency is going at a premium, that currency will become costlier. Example, now 1 GBP, $1 GBP is equal to, say, same example in the book I will tell. If now it is 1.60 USD, 1 GBP is equal to 1.60 USD. In future, suppose 1 GBP is equal to 1.6050 after 3 months. That means you are 0.0050, you are paying some extra. That means that you are paying dollar extra for the same unit of GBP after 3 months. So GBP is costlier in the forward. That is why it is at a premium. Like that, you correlate and study. So now another question they can ask the forward is, what is a forward? What is a forward? Forward is nothing but interest rate differential between the currencies. Because when there is a interest rate between the currency, because of the arbitrage opportunity, banks will not, corporates will not, people will be prepared to part with a currency which earns more rate of interest. So I have got some INR which is earning more rate of interest, and you are asking me why not to give dollar for this. I will not agree, because instead of giving this rupee to you, if I put it in the market, I will earn more rate of interest. So I should be compensated in the difference rate. So you are giving me dollar, suppose that is 2%, and I am giving you rupee which is earning 7%. So there is a notional loss of 5% in the interest rate. That is what? That is compensated by way of premium. If you are giving me the premium, I am not losing, because I am protected that X and the interest rate difference. If otherwise, I will be earning, the market is protected. So that is premium is nothing but interest rate differential. Interest rate differential. Then another in premium and discount. Another thing is, I earlier suppose in the question they specifically give the market forward points are going at a premium, means you can straight away you can adjust. Your premium means, another mistake the students do is buying and selling, because they mug up all the habitually you do so many problems. So treatment of commission, buying you will deduct, selling you will add. So under the same psychological that the habits die hard. Say no. The premium when it comes inadvertently, I have noticed some students they go for the adding and subtraction of the premium. So buying premium have that, selling have that. No, premium. Understand? Premium means it is to be passed on irrespective. It is a buying or selling. Naturally, discount is the opposite. Opposite. Suppose they make the question very tough. They do not specify it is a premium or discount. They are doing only the forward point. Suppose they are going like that, then go for this small trick. If the forward points are 5, buying and selling is in the ascending order. Ascending order, it is a premium. If it is like this, 10-5. Descending order, it is a discount. You study what you do for premium, just the opposite is for the discount. Just the opposites for the discount. This is how that forward points. Then treatment is the treatment of premium for the examination. There are 3 types of theoretical also. Practice, what we do is for the problems which you would have been familiarized. You have already done so many problems that first we will discuss, then we will go to the theoretical side where they can ask questions. Then first with the practice is problem is arithmetic side, the treatment of premium. If it is for a buying rate, if it is premium, you pass on the premium up to the last month. If it is, this is for a full month delivery. That is, suppose the customer is delivering for full day option, means right from first day to the last date, any date he can deliver. In that case, we will not pass on the full month premium for buying previous month, for selling up to the month. So this is the habit. So this is what normally they ask for the examination. Normally they will ask only those questions pertaining to the premium for delivery full month option. Any day during the month they will. Other than that, as per UCBDC, theoretical questions can come, that I will tell. In that first half of the month refers to 1 to 15 days. Second half is 16 to last day. And another terminology that is used in the premium theoretical side is beginning of the month, middle of the month, end of the month. Middle of the beginning of the month mean 1 to 10. 1 to 10. So whenever somebody is doing a contract for the beginning of the month, we will be giving the premium up to the previous month, last day of the previous month. And the terminology middle of the month refers to 11 to 20, 11th day to 20. In that case, if customer is booking a contract for a middle of the month, 11 to 20 means we will pass on the premium pro rata premium up to the 10th. Suppose a customer is end of the month means 21st last day. Suppose a customer is booking a contract for a delivery with middle of the month means we will pass on the premium up to 20th. So this is the theoretical concept they can ask, but practically mostly we have seen so far only problem will be pertaining to full month delivery. So up to or buying up to the previous month, and for selling up to the month. If it is premium and if it is discount, just do the opposite. Buying instead of previous month, discount means up to the month, and in a selling case, instead of up to the month, go for previous month. Just opposite. Always, that's why I say that tip is that study the premium perfectly. Discount, you treat the opposite. Okay. Then is the various types of rates. In this various types of rates, you know, all the rates are the same. Interbank rate are the same. Depending upon your risk nature, your bulk involvement, we differentiate the commission. Because of the difference in the commission, the rates differ. Actually, the interbank rate is the same. Only because of the adding our margin, that will be differing depending upon the nature of the work and the risk we are shouldering. So accordingly, if you say there are only, though there are many rates available for our examination purpose, this will be only 4 types. That is TT buying, TT selling, and bill buying, bill selling. TT buying and TT selling, for here the TT buying rate will be applied for all covered fund where you have received the fund. So when you have received the fund, you do not suffer any risk at all. You have received the fund either with you Suppose that earlier example, $1,000 somebody is giving you, you have received the dollar, no risk. Or some realization of export proceeds, you have received the fund in the nostro, no risk involved. So our margin will be very minimal. So we apply TT buying rate. This is buying because you are inflow foreign currency. TT selling outflow foreign currency. Already rupee fund you have received, no risk involved. So this is here the margin will be slightly bigger than buying. If you compare the buying, the selling will be the margin will be slightly bigger. And all other transactions are bill nature, where the always in the bill transaction our risk will be more. So the naturally the commission also will be more. Export bill, that often they will ask what rate apply, because the answer is in the export bill itself. It is there, bill buying, purchase, discount negotiated, we apply bill. Purchase means side bills or demand bills. Discounted means in Osan's bill. Negotiated means the bill is under LC. Any purchase of checks or DD you are doing, because check or DD it's a bill of exchange. So we are applying only bill. And bill selling, they never have any confusion. Anything related with import, anything related, only two things they will be asking in your examination. That is retirement, that is payment of an import bill, or crystallization of an import bill. Only the two things they will ask. Both bill selling. Bill selling is the maximum, because we are having maximum risk. The bank is having only in import bill transaction, because we have got the commitment to make the payment to the foreign person. If it is retirement means, if it is as per the LC, if it is the documents are presented, if the documents are presented conforming with the credit, you have to make the payment. You have to retire on the due date. So the bill selling will be there, crystallization of the bill. Anything related with import bill selling. Study like that, that is enough. Then we'll just the arithmeticals, arithmetic, exchange arithmetics to consolidate. You know the buying and selling already I have explained you. Foreign currency inflow buy, foreign currency outflow for the bank, both bank is selling. Treatment of commission, buying you deduct the commission, selling you add the commission. Premium discount already I have shown. The cross rate mechanism I will say, because paucity of time we will not go for the problems. Only I will tell you that theory. In cross currency transaction, there can be two things. If the foreign currency are on the, I will show, then I will explain. So that will be clear for you. Like this. Suppose they just look at this. This is enough. What I have selected. In this, what happens is, in this is a pair of currency, cross rate, where one is a direct code, GBP is a indirect code. Because of that, only the dollar, which is a common currency, that comes in the opposite side. If you are getting a question, you just apply the fund rule. If the dollar, that is common currency, is on the opposite side, you follow this trick, multiply by the currency on the same side. Buying this into this, selling this into this. This is a very simple. This is a very simple. And if it is on the, just like if the currency pair both are from direct codes, if both are in the direct codes, then the dollar will be in the same side. Common currency will be said. In that case, divide by the rate on the opposite side. If it is a buying transaction, divide this divided by this. If it is selling, this divided by this. They follow this thumb rule. This is enough for you to, for the time being, just go by that, because why we are taking this, why we are applying this and all, already we have discussed in the original class. Next is that fixed and floating rate mechanism. And here the possible question is this one. India, we switched over to the floating rate right from 1993 we have. So in the fixed rate mechanism, example is dollar, the Saudi Riyal and UAE dirhams and all, there it is fixed rate. The home currency will remain fixed. So they are less affected by the exchange rate. Here we are, that is, our rate is floating rate means, what do you mean by floating rate? They can ask. That is, the rate is decided, value is decided by the fundamental forces of supply and demand factor. And I explained to you the practical example that is happening because of the outflow of dollars in view of the consequent to the increase of hike in the interest rate by a US Treasury. The dollars have flown from India because of that supply has reduced, which resulted in demand for that currency. So dollar has become very costly. Dollar has appreciated, then naturally rupee has become depreciated. Always have that in your mind. That is enough at this point of time. Then with this, we'll go to the second slide. I think the first session we have got till 8 o'clock, isn't it? So we'll
Yes, sir.
finish some more,
Yes,
and
sir, yes,
after
sir.
that, we'll go for the questions. We'll last round. I will take this. Okay. Then another question they can ask is regarding the cancellation of contract, extension of contract. Here the theory, both theory and practice is there. Practice already the case studies you would have done it. Whenever theoretical, I will explain because that is more important. There is no extension of contract as per the RBA guidelines. If somebody is requesting to go for extension of the contract, we have to first cancel the contract and go afresh for booking the contract. Again, I repeat, there is no extension of the contract as per the RBA guidelines. Suppose a customer has booked a contract originally for a 3-month period on January. So the period will be January, February, March. Originally, he has done a maturing on delivery on March 31st. Now, on 2 days before, that is the spot date, he comes and tells you that I want to extend this another 3 months till June 30th. You cannot extend. You have to first cancel it. Then rebook the contract for another 3 months. That is maturity delivery date, June 30th. So for cancellation of the contract, apply the opposite TT rate. So forward selling to be cancelled at opposite TT rate is TT buying, and FPC, forward purchase, to be cancelled at opposite TT rate means TT selling. So that is the reason. I will explain subsequently that also very tough. Why we are going for the opposite, I will explain. So always bear in mind. Then another point that students face is, sir, should I add originally the premium and then calculate the commission, or first calculate the commission and we go for the premium? Of course, there is a mistake, or that the concept is slightly different in the Macmillan book. They have treated on purchase and sale, the treatment is different. And we have already deliberated, never go for such confusion. A rate means inclusive of premium or discount. Whatever is the adjustment after the premium and discount, that is a rate. And that is a resultant rate. And always the commission is calculated on the rate, which is already adjusted the premium. So never, and if at all any differences, that will be in 0.000 something. So never go for bother about this. You go with, because that is a practically in the bank, we do like that only. First you take the basic rate, interbank rate, spot rate. To that you adjust the premium. That is the rate that you give for the customer. On that rate, you calculate the premium. So never have any doubt. Go by this structure. That is enough, because that is what we follow in the bank also. And functions, these are all theory. Functions that dealing room, similar to that. Now this is a service branch. Now it is a profit center to meet the requirement customers. Buying and selling foreign currency, manage nostro accounts, foreign currency assets and liabilities, undertake proprietary trading provisions. Here also they can ask depending upon the long short position. I told you speculative transaction is the main, the trade transaction is the main function of the treasury, because the nearly 25% of banks' whole profit is made there. Act as a separate profit center for the bank. These are the doing of the dealing room, theoretical questions. And the fund position, because what are the duties of the dealing room? And the fund position, because any point of time you should know what is a fund available in your nostro account. So all the inflows you add, all the outflows you deduct. So that at any point of time, you will be having an inference what is the position of your nostro account. Accordingly, if need arises, you have to fund. because this is very important practical side when we have worked in the treasury, because whenever suppose a TT goes in your foreign bank, the fund is not there, means here only we have got system of calling the customer or calling the bank there and all. Already they have got a sanctioned intraday limit and day limit will be there within the day and for the day. Then that if we have got a sanctioned limit, they will give you the fund and pass it. Otherwise, they will return, means next day you will not be able to take part in the clearing. So the funds management is very, very important. Not unlike in the branches we see other. And currency position, exchange position is very, very important, because here they can ask some questions, definitely. First question, what is the open position? Because when they are buying some dollar, we call it as I have bought dollar, it is overbought, or we call it long. And when I have sold dollar, we call I have sold a dollar, that is oversold, or we call it as a short position. And what is the theoretical question they can ask is whenever you are buying dollar, assume there is no sales, only you have bought a dollar. Some customer has brought 1 million export bill. So this is overbought. I am having a position. You have applied exchange rate. Beginning of this first sentence in the class I started was, whenever we are applying an exchange rate, you are running the risk, exchange rate risk, price risk. This is it. I have paid $83 for an import bill. A customer has bought $1 million. I have applied the rate, it is exchange rate 83. So 8 crores 30 lakhs I have paid to the customer. Now I am having 1 million. I have to sell it in the market and make my original INR. Unfortunately, the rupee has appreciated. It has become 82. When I sell the dollar, I will be getting only 8 crores 20 lakhs. I have paid the customer 8 crores 30 lakhs. Now I am getting 8 crores 20 lakhs. 10 lakhs is a loss. So that is the risk. Whenever I have applied a exchange rate, I am running a position that is known as open position. The meaning of open position is I am open to exchange rate risk. So I cannot. So the bank has decided that I should not run the open position. Immediately I have to square it in the market. How to square? I have got $1 million by buying. Immediately I will sell it in the market. Immediately, so that I will not be affected by the exchange rate fluctuation. So when I have got a bought dollar, I have to sell so that my position is squared. So at the squared position, I don't run any position because I don't have any. Only if we have got a currency which is converted, acquired by conversion, acquired by applying the exchange rate, then only the risk will come. Here also the students will make a mistake. I have received $1 million in my nostril. That also is a foreign currency, but there I do not have the risk because I have not converted that currencies. As long as you are not converting any currency, you are not running the risk. Only when you convert, like that export bill, I have applied 83, then only the question of risk comes, exchange risk comes. So this is recording. Likewise, in an oversold position, first I have sold the currency. So immediately I have whatever I have sold, I have to buy from the market so that my position is squared. So here the possible question is, what is overbought or long, what is oversold or short, and what is open position, and what is a cover operation. Doing that opposite deal to square the position is known as cover operation. What is a squared position? And in the squared position, yeah, that is what it is. You are not having any exposure. You are not exposed to the exchange rates. These are the possible question they can ask. Then is there a squared position? This explanation. Then the front office and back office dealing room, already you would have studied. These are a very purely theoretical area, just a theoretical area. This front office dealing room, the possible question is, who manages the noster account, they can ask. Where they report, they can ask. And in the back office, the common question is, who does the verification, who does the reconciliation, who does the confirmation, they can ask. And these are all normal questions they can ask in the back office. And the mid office, every time they ask only this: who provide information to a management information system, And CRO, every time, maximum number of questions they have asked it in CRO. Chief Risk Officer of the bank. Chief Risk Officer of the bank. And then one more question will be there. Compliance, that who is responsible for the implementation of the risk management guidelines, both from the Reserve Bank of India and the bank's own guidelines. That mid office is responsible for it. These are the common, these are all theory only, that they will be asking questions like this only. This is now that present guideline of mid office is that I think that mid office can function anywhere. It need not be close to this back office or front office. It can function anywhere because of that implementation of information technology from anywhere. You see right now online, I am sitting in a place, Trivandrum, and all the students across whole India, we are all doing that because of the implementation of information technology in the banking field. Effectively, that is being implemented like that. The back office can function because now these are data is available, data is. And these all the three are reporting differently because of the huge crores and crores amount involved. That is why the RBI has set up these guidelines. So these are the possible questions they can ask in the examination. In arbitrage is simple. Arbitrage is simultaneous buy and sell. Simultaneous buy and sell in two different markets for making profit. So in arbitrage, just study three things. That is enough. Just study 3 points. Simultaneous buy sell, two different markets for profit. Only that is enough. And if it is for the swap, what is a swap? That also is buy and sell, but two different maturities. I will buy in spot, sell in forward, or I will sell in spot, buy in forward. This is a swap. Because the purpose for which arbitrage and swap is done is different. I remember last week one student asked me, raised a doubt, can you explain what is an arbitrage and swap? So I thought that I will benefit of all of you. I will explain that once more. Arbitrage is for the purpose of making profit because it is simultaneous. I know at the point of buy and sell how the two different markets is going. Suppose in market 50 rupees, another market 51. I will buy at 50 and sell at 51. This will operate only for that market. Temporary disturbances will be, the aberrations will be in the market, maybe for a short period, and we have to immediately do that. That is why simultaneous buy and sell. And arbitrage will always be profit because you are putting the transaction simultaneously. So that is a question that you have to bear in mind. The arbitrage, there cannot be any loss, only profit. Why? Because it is simultaneous. Buy and sell is done simultaneous. It is for making profit. If it is not profit, you will not do it at all. But whereas swap, it is not for profit. It is for adjusting your gap. You have got some fund now available with you now, but your requirement is only at a later date. So you swap the fund, give it now, buy later, so that your fund will be matched. You need not unnecessarily hold that. So gap management, swap is done. Profit management, arbitrage is done. The purpose for which both is done is totally different. That makes that character of arbitrage and swap different. Arbitrage for profit, swap for gap. It's a good caption, swap for gap. Very good. Then uniform standard account practice, nothing much important. Maddy, please ensure that you mute that. Okay. Now that uniform standard, because here only one point that you have to bear in mind is FEDA is the authority who gives the rates for the valuation. We have got so many that in a bank, we are maintaining assets and liabilities, assets and liabilities, and the foreign currency and assets and liabilities, we have to account it in your books. Actually, we have to apply a rate. So FEDA will be giving a common rate. That is a uniform practice. So that we will be valuing, all will be valued based on the last Friday and all, they will be giving 2 o'clock, the rate will be coming, and all the banks have to value the same. So that it will be ethical values are followed, the comparison will be sensible, meaningful. Suppose I got some dollars, I am valuing 83, 1 million. I will be showing at 83 crores. Other bank will be valuing at 84, they will be showing 84. So it will give an impression that bank has got everything or deposit more. But actually, that is why the bank, we have to follow the figures given by FEDI. That's the purpose. So that the valuation will be common, equal, same. Then is AP12 category. Here you see now that is authorized persons as per FEMA. Bank is example. We can do the character of the AP1 is we can do all buy, we can do all sales, we can do nostro operations, maintain the account, we can do speculative deals, everything. In AP2 category, example Thomas Cook, they can maintain now. Nostro account can be maintained, buy and sell. They cannot do speculative transaction. They cannot do trade transaction. They cannot do arbitrage and all. They cannot do anything. And this 3 is, now it is not 3 is not there. It is acting as a franchisee of AP2 category. Here the change what has come is they can do only buying transaction, purchase transaction, which has to be encashed with their franchisee, the franchisor within period 7 days, 7 days. So they can do only buying transaction, whatever currency they have bought, they have to surrender to the AP2 to which they are linked within 7 days. Then major that guidelines is notional transit period, normal transit period, notional due date and fixed due. This is also very important from the examination point of view. Normal notional transit period is 25 days. That is applicable for all transactions, that are all side transactions, 25 days. That means 25, any party is giving you a bill, you can take interest on the export bill because you are parting with rupee amount. For that, you can take interest for 25 days. All the bank have to take common for 25 days. If the bill is realized early, you have to refund the interest. And if the bill is realized late, we have to take the balance at the maximum OD interest, or the bank will be specifying the interest. In respect of notional due date, the 30 days osans means 30 plus this 25, 55 days is the period available. We can take the interest for that entire period. And whatever if it is same, if it is realized early, you have to refund. FDD is fixed due date. The fixed due date is if the usance is calculated from bill of exchange or bill of lading. That is known as fixed due date. There, that thing is that benefit of that 25 days is that the normal transit period 25 is not there. Only the usance because it is fixed due date. Then crystallization of both the export bill and import bill is now done by the bank. Crystallization. Another question they can ask is import bills crystallization, the rate applied. I think they will be asking so many times they have asked at TT selling rate. Export bills are crystallized at TT selling rate, and import bills are crystallized at bill selling rate. Already I have told you anything with import, apply bill selling rate. Cancellation of the forward is at the opposite TT rate. Already I have told you. FSC, TT buying, FPC, TT selling. Then this also, because of these currency, that also they can ask in the examination. The value of this Indonesian rupiah, Japanese and Kenyan shillings is so small. These rates are quoted against 100 units of that currency. 100 JPY is equal to how much? 100 Indonesian rupiah, how much rupees? 100 Kenyan shilling is how much rupee? Like that they will, because the value of that currency is very small. So FEDA has given instruction that these currencies should be quoted against 100 units of that currency. Then the accreditation to forex brokers given by answer is FEDA. Then interest for delayed settlement should be done 2% above INR means Mumbai interbank rate, and if it is dollar, prime rate of Citibank, and if it is pound sterling, 2% above the Barclays Bank, the prime rate, 2% above that rate. And automatic cancellation of any delivered contract that should be done on the third working day. That is the third working day. That also they can ask. Then an authorized Reserve Bank of India, let's only authorized dealers, we can open and close any foreign currency, and any investments, that is creation of asset and all, without referring to RBI, if the period is less than 1 year, we can do. And this is very, very important, that overseas eligibility. The borrowings limit they can ask in the examination, 100% at tier 1 or 10 million, whichever is higher. So in the question, now they used to ask, earlier they used to ask directly how much, 10 million, 20 million, answer they will give you 10 million, we can tick, very nice. Now they are going for the concept, whether the student has understood the concept very well. So they will give you some items in tier 1. So you should know what are tier 1. You have to pick up the tier 1 items, find out what is the value. If it is 8 million, they have given share premium account, they have given you equity, they have given you revaluation reserve. So all the things that comes in the tier 1, you total that. If it comes to 8 million or 10 million, whichever is higher, then the answer will be 10 million. Suppose the tier 1 you add, it comes to 12 million, then the answer will be 12 million, whichever is higher. Like that they do it. Then the last one point is, import and exporter, they are permitted to book forwards. Here it is very important. Two types of bookings are there. Number one is, suppose you have got you want to book a forward for either export or import. Suppose you have got a letter of credit or a firm order. We call it as underlying. Basic, that is there, then 100% you can go for booking. There is no limit. Whatever is your LC, whatever is your firm order, you can go for booking the entire amount. There is no stipulation. But if it is, number two, second thing is based on the past performance quota. If it is based on the past performance quota, the RBI circular says, first I will tell you the circular, then I will explain. Says it is based on the actual during the previous years or last preceding 3 years average figure, whichever is higher. Suppose the average for the past year, that comes to say 30 million, 30 million, and you have done on one of the things, say 40 crores. One year you have touched the 40, then the 40 will be the whichever is higher. Actual figure in the past years or the past 3 years average, whichever is higher, you can go for booking the forward. But here only one restriction is, if it is under past performance quota, you have to deliver and non-deliverable. Non-deliverable up to 75%, you can decide. You can non-deliver, plus or minus profit or loss will be passed. But the remaining, the 25%, in excess of that 75, compulsorily you have to deliver. You cannot cancel that. That's the only criteria. I think that with this, we can go for the questions. First, okay, let me go through that. First is voice not coming. Voice not coming, not able. Good morning. Already the chance to continue same system, sir has antidote. Full form a straight through process, Jayashankar. STP is straight through process. Straight through process is one where everything is system driven. Manual intervention is not there. Now that volume of transactions are more, the STP will ensure that quicker processing is with no mistake, nil mistake. That's a STP. What is the normal working time? That is decided by the respective regulators of the country. Here, Reserve Bank of India has, that is, FEDI has given the decision normal working. It is up to 4:30. We will not that 4:30 only we will be able to give the rates for the merchant transaction, because beyond that we will not be able to cover in the market. Here, that additional guideline given by Reserve Bank of India is if you should not put through cross currency deals after 5 o'clock. We call it as initiating position. That is, suppose I have got $1 million to be covered in the market, that I can cover, but I cannot go for buying $1 million after 5 o'clock from a European market and wait in the night to sell it in the US market unless I have got a board approved policy. I will explain once more. If only a bank has got a board approved policy, then only I can go for doing deals after 5 o'clock. Otherwise, after 5 o'clock, I cannot initiate possession. I cannot do cross currency deal. But one thing is permitted. What is permitted? Suppose already I am running a long or short position. I am not able to square it in the market for better rate, fine rate, competent rate. Then I can wait it in the market till overnight and square the position. That is permitted. And this working time, then our instructions given by FEDI has stated. Like that, the competent authority in respective countries will decide the timings. Then STP is straight through process. Okay, please mute. Okay, please mute. If
Yes, sir. They can unmute, sir.
uh,
Yeah, friends, anyone want to ask question, you can ask now.
What is the difference between AP Cat 1 and AD Cat 1? Sir?
AP Cat 1 and 2 are.
AP Cat 1 and
Authorized
AD Cat
person
1.
category 1 and 2. Sir.
AP category 1 is bank. They can do all buy, sell. They can do trade. They can do maintain speculative deals. They can do trade transaction. They can maintain nostro. But AP2 they cannot. All other things they can do. But AP2 they cannot do for speculative transaction. That is trading. They cannot do long short positions. They cannot do all other things.
My doubt is not 1, 2, 3. AP Cat and AD Cat.
AP, very good. AD means authorized dealers, and AP is as per the FEMA. AD is renamed as AP. That's all. Instead of wherever we say AP, it is not AD. It is AP only. As per the FEMA, instead of there is no dealer, all are person. Only the banks. Anybody, any authorized person can buy and sell foreign exchange. So there is no AD concept as per FEMA. All are AP. That is why even RBI circulars are now AP directive circular. Earlier it was AD directives. Now it is not there.
Okay.
They please explain
Thank you.
10 million,
Thank you,
whichever is higher tier. Here, the Murugan, the 10 million, the overseas borrowing eligibility is 10 million. That is your tier 1 capital or 10 million, whichever is higher. Now in the questions, in the examination, they will give you some items in the tier 1. Just like equity, share premium account, revaluation reserve, disclosed reserve. Like that, they would have given some item and also tier 2. So you should know what are the tier 1, and you have to pick up the tier 1 items. Then total that. Suppose that comes to 12 million, it will be higher, 12 million. Suppose that tier 1 comes 8 million, then 10 millions will be the eligibility. Please explain premium. Premium is the interest.
So regarding that working hours of that.
TT selling rate, sir, please explain. TT buying rate
Just a
and TT
moment.
selling rate.
Before that, somebody was asking what. Let me finish. On my
So what is the working hours?
working hours is decided by the respective authorities. Our working hours is given instruction by the FEDI under the rules which we follow.
That means 10 to 5 or.
Now 10 to 4:30. 10 to 4:30 is for the merchant transaction because we will not be able to square it in the market.
So regarding that, a question you asked in, while taking the class, no? In 5 o'clock time, what forex markets will be open? You told
Right.
that India and European, but 5 o'clock 4:30 Indian market will be closed. Then how we can answer India and Europe will be open at that time?
Depends upon yes. We are not telling you about which type of transaction your bank will be having. You have got a position to square. I told you, suppose you have got 1 million position to square. For that, it is allowed. You can square it in the market. But you cannot initiate a position after that. That's what I told you. Got it? Suppose already you are running a long position or a short position for 1 million. You are not waiting.
For that transaction, we can continue up to 5 o'clock.
Up to not 5 o'clock. You can wait overnight and square it in any of the market. But after 4:30, you cannot initiate a position. You cannot do a fresh deal. You cannot
Okay,
do
sir.
a fresh deal after that. You got it?
Okay. Okay. Thank you, sir. Thank you.
Right. But
Sir.
already you are running a position. You have to square it. Without squaring, you cannot go home. So you have to wait till overnight. If the Frankfurt market is not favorable, wait for US market. That also is not favorable. Wait for next day morning. So
Okay,
that
sir.
for that you have to square. But you cannot initiate a new position. New thing you cannot take after that.
Okay,
Suppose
sir.
your board is giving you permission, then you can do. Subject to board guidelines. Okay, then please explain. Premium is a interest rate differential. Interest rate differential. Please work out problems. Please work out problems in TT buying and selling. What is, I don't know. TT buying and selling is that you apply the rate for any inward foreign currency. Example, inward remittances you give TT buying. Outward remittances you give TT selling. Anything. TT buying is any fund received in your nostril, covered fund.
Sir, what is the thumb rule you said in TT selling and TT buying?
Any covered transaction TT buy. Already you have received fund. Example, inward remittances, any fund received in the nostril. TT selling is selling. There is no thumb rule. Okay. I think that whatever in the chat box, I hope I have answered all the questions. Now, after business hours, how can that I told you know. After business hours, if you are running a position, you have to cover that. What is
Sir,
bill buying?
premium.
So spot rate. Please
How
once
many
again.
international accepted? The international accepted holidays, we have to go by the calendar. That we don't have any restriction because already international calendar will be there. Whenever a dealer is doing, we have got an international calendar. Depending upon only you will be doing. Then bill selling and mine. Oh, yours and mine I buy. Oh, you sell. Yours is no. Yours mine means I buy. The taker is buying.
Sir, balance of payment, please.
Sir, can you just
Sir, can you
explain
show
once
that
the
slide
spot
again,
rate?
sir? Your mine and mine. That
I am
thumb rule
explaining.
one.
That is mine means I buy. The taker is buying. So the rate will be selling rate because the maker is selling. Mine means I buy. The taker, I am the taker, I am buying. When I am buying, he is selling. The rate will be selling. That's it. Okay. Max question, Nidhi, very sorry because another 3 hours we have to finish the entire thing. So you have got any conceptual clarity?
So please explain BOP, balance of
Please
payment.
explain the
once more.
spot rate, please.
Spot is any rate that is the transaction that second working day. The settlement of the transaction is on the second working day following the date. So today is Monday. I am doing a spot deal means Wednesday will be the spot date. Okay.
Okay.
Sir,
Wednesday will
premium
be the spot
cancellation.
rate. So
Premium
settlement
cancellation at the
also
end of the month.
At the end
On
of
the
the
due
month,
date.
21 to last day, end of the month. 21st
That
last
is-
day. So you'll be passing on the
If-
premium only up to the previous day, 20th. Then
So
please
suppose it
explain.
is at the
Sir, what
month, at the end of the month means?
End of the month, 21, the transaction is any day he will be giving you the bill 21 to last date. So you will be paying the premium up to 20th. They will not ask
Sir, what is the
questions.
difference between selling and bills buying, sir?
Bill selling is bill selling and
TT selling.
TT is a bill that is this bills apply to bill transactions. For other transactions, we apply TT. Please explain.
the
10 million
retirement of
which
import bill and the export bill comes under TT
just 1
selling
minute.
or
Okay, just this 10 million, whichever is higher tier 1 or concept not understood. Murugan, that they will be giving. I think I have explained that tier 1. I have explained. Okay, madam, you can ask me, please.
retirement of import bill and export
Anything.
bill comes under.
No, we call the terminology is there is no question of retirement of export bill because import bill payment is the international language is retirement. Actually, it is payment only. So that is why we call retirement of because in accordance with the practice of the international that practice that is followed, we also, the terminology we also use in the retirement. Actually, it is payment. But in export, you have to already you have discounted the bill, you have to get the payment. So there is no question of retirement of export bill. Already you have paid for the bill, you should receive that payment from the foreign party. Okay?
So the crystallization
Okay,
means?
Crystallization, very good. Crystallization means conversion of the forex liability to INR liability. Because it has got so many benefits. Because suppose I am not converting on a date, already two things are there. Number one is, whenever I am doing a purchase, I have got a commitment, sale. So I cannot indefinitely wait for it. So I have to, if the payment is not forthcoming, I have to convert to for rupee. Second is, I am protecting the customer trade, that importer or exporter, from the possible adverse exchange rate fluctuation. Number three, I cannot indefinitely wait for it, because if the customer is not paying, I have to make the payment. Then I have to recoup the money from the customer. Suppose customer is not having money, I have to file a suit. For that, I require that INR. And another point is, in forex operation, there are two losses. Suppose something happens. Normally in other thing other than forex, I am responsible to pay damages only for financial losses. But in forex transaction, in addition to the financial loss, the bank will be responsible to make the exchange rate loss also. So that is involved. Suppose a customer, you are not giving the currency on the determined the exact date which is to be paid. I am paying the amount delayed after some 10 days. If any adverse fluctuation of interest is there, that exchange loss also I have to compensate. So two losses, financial losses and exchange losses are there. To avoid that, FEDA has given the instruction of crystallization. Number one is that we can square off our position. Number two, we are protecting the customer from the exchange loss. Number three, we can file suit on a definite amount, INR, if need arises. Any other questions?
Within 3 days.
Within any credit should be given. Very good question. Second day, whenever the nostro credit is received, you have to pass on the credit within 2 days. Otherwise, you have to compensate by interest. Can we continue? When is the next thing? Biju, etra manikka?
Sir, 9:30.
Can we? 9:30.
Yeah.
Can we assemble at 9:30?
Yes, sir. Yes, sir.
Overbought. Overbought means you have asset is created. You have bought the currency, or net of buying and selling, you have got excess of buying, purchase. That is overbought. Or long. Sold is when you are netting buying and selling, selling is more. Sold dollar is more. That is oversold. Okay.
Sir, can you explain
Can we-
again, sir? I could not able to follow because network problem.
Which one?
Last overbought that one.
Overbought. That is how you have bought the currency. You have some currencies you will be buying, some currencies you will be selling. You net that buying is more. That is overbought. I will explain. $2 million you have got exports. 1 million you have got sales, import. Net is buying 1 million. That is overbought. Please explain where we have to take full month and second month premium. Divya, that is in full month premium. Usually the delivery any date during the month is full month. In that case, for buying you will be taking previous month, and for a selling you will be taking up to the month. Previous month. That one slide is already there. Can we assemble at 9:30, please? Okay.
Okay,
We'll
sir.
continue that. You will continue that. No problem. Okay. Because you have to get organized before 9:30. That is why. No problem. You keep the questions. We will continue that. Okay, Rajesh.